Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. Everywhere you look, it seems like the markets just keep going up. When will it ever stop? Well, today we're going to talk about what to watch when real estate values keep rising and how to make sure you're positioned for success no matter what happens. And we have an incredible guest today on the Real Estate Guys radio program.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. With me, as usual, it's our co-host and financial strategist, Russell Gray.
Hey, Robert.
It seems like all the real estate markets can do is go up, 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 up. The Fed is printing trillions. Everybody's got equity. What could go wrong?
Well, we've seen this movie before, and of course, it's always variations on a theme. What's the old saying? History doesn't always repeat itself, but it often rhymes. So it's important to proceed with caution. It's not unknown to our audience that 2008, we were blithely going along thinking we were all that in a bag of chips, and the market came along and really blindsided us. We had our back to the tsunami, if you will, when the credit markets collapsed and did not understand how dependent we were on them or what was affecting them. And we started going out seeking wise mentors, people that were both in the space and outside the space. And along the way, we discovered Peter Schiff and started really listening to him because he had written the book Crash Proof and had kind of predicted what was going to happen and got it right for the right reason. But we also started listening to some other people that were very experienced in the real estate space that didn't get washed away, but in fact actually made a huge fortune during the time. And during that period of time, we learned a lot about how they looked at real estate. And it was not as much about the property, but it was more about getting the niche, the demographic, and the geographic market right and understanding those drivers. And that turned out to be a huge shift in the way we have approached investing since then and market selection. And we've done a lot better since then.
Real estate markets move in cycles, and it's easy to look in the rearview mirror and see that. It's a little harder to figure out where a market sits right now, but all markets don't move at the same time. And when I say markets, not just geographic markets, but the types of markets. The commercial market's not the same as the retail market or the industrial market or the residential market. And so it is very fractured in that regard. But a lot of folks who invest in real estate, they don't pay attention to any of that. They just find a property, figure out property management, find a tenant, and they're off to the races. And little by little, they build up a nice portfolio of property, and then something comes along and changes everything, like a pandemic or an eviction moratorium or a complete drying up of the money necessary to get loans for properties. And I think astute investors kind of pay attention to history, that rhyming you talked about. Everything does change, and the facts are different this time around. But anytime we see the market get overheated and continue to go up, we see more multiple offers, people bidding $100,000 over asking price on a property that was only asking in the 4s or 5s. That's just a little red flag we got to pay attention to.
Yeah, well, we know that all markets move in cycles, but real estate is slow moving, slow developing, slow to react. And for a lot of reasons, that's great. The problem is if you get caught flat-footed in a slow moving asset class like real estate, it's hard to take corrective action because things are moving very quickly. So one of the things we learned coming out of 2008 is how important it is to look further down the road and how important it is to listen to people who've been there and been through some market cycles, especially those people that read the tea leaves correctly and got it right. We put a lot of emphasis on that in this program and really trying to highlight people that have had that level of success, both at the macro level, but know how to sew the macro together with the micro. Because at the end of the day, real estate is local market, right down to the street. And of course, every property is unique. So I use the term asset class extremely loosely because, as you know, I don't really believe that real estate is an asset class. Even a niche like apartments are very different in one city to the next city, or even within a city from one submarket to another submarket, even within a neighborhood from one side of the street to the other side of the street. And that inefficiency creates a lot of opportunities for smart investors to find deals, but you can't escape the macro, the market that the asset is sitting in. And so you have to look at all those things. And of course, when it comes to income producing property, at the end of the day, it comes down to really being able to manage that thing well. It comes down to operations.
Hanging around with smart people and learning what they think has been a super key to our success. Today, we're happy to have on the program one of our great friends and one of the smartest real estate guys we know. When we come back, we'll say hi to Kenny McElroy today on the Real Estate Guys radio program.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
Stop for a moment. Why are you listening to this show? Are you dreaming of a bigger, brighter financial future? More personal freedom to live life on your own terms? What if there was just one skill that could make it happen? There is. Sales. Robert Kiyosaki says every entrepreneur must be good at sales. It's true for investors too. Sales is how you attract money, people, and opportunities. Sales is the skill used to negotiate deals and lead your team. Sales skills are essential to success. The good news is, it's a learnable skill. The great news is, we've created a 2-day interactive workshop to teach those skills to you. Make plans today to attend How to Win Funds and Influence People, Mastering the Art of Financial Selling. For dates and details, send an email to sales@realestateguysradio.com or visit realestateguysradio.com and look under events. Gain the skills you need to succeed. Email sales@realestateguysradio.com or look under the events tab at realestateguysradio.com.
Hey, ever wished you could go back in time and do some tax planning? Now you can, just like Marty McFly. Lucky for you, a brand new federal law just made this possible with an EQRP to get tax deductions and reduce your taxable income from last year, so you can use that tax savings to invest in real estate, Bitcoin, gold, even your own business. Whether you're a full-time investor, doctor, government employee, even if you have 5 or 50 employees, the EQRP works and is your secret weapon, and now it's retroactive. Hey, I'm Damian Lupo, and we have your solution. By the way, if you got bad advice and used an IRA for an apartment syndication, you are sitting on a U-bit time bomb. But don't worry, there's a solution, the EQRP. The EQRP company is ready to help you get control of your money, kill U-bit, and help you pay way less taxes. Want to learn more about this strategy? Send an email to eqrp@realestateguysradio.com for my special EQRP report. Paying tax or letting Wall Street suck you dry is dumb. Your first step is freeing your retirement money by sending an email to eqrp@realestateguysradio.com today.
Hello, this is Dave Lendiger, co-founder of Remax International. You're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program, heard every weekend on this great radio station, all the time at realestateguysradio.com. We're talking about the crazy real estate market we find ourselves in and what may be happening next. Please welcome back to the Real Estate Guys radio program, best-selling author and all-around awesome guy. It's our friend Ken McElroy. Hey, Kenny.
Hey, what's happening, guys? Great to be on the show again. I appreciate it.
Always good to have you on, my friend, and also just to hang around you and watch what you're doing. Just love the fact that you continue to share great stuff on your videos and your podcast. It's a crazy market almost everywhere. We're seeing multiple offers. The market is heated up, and one of the things you've always taught us is you can't just jump when the rest of the crowd does. You have to pay attention to the big picture. What are you seeing out there, Ken?
Oh, I think everybody believes they're really smart. That's what I think. You know, you buy something, it goes up, whether it's Bitcoin or houses, it doesn't really matter, right?
Right.
Yeah, you know, as you guys know, we've been here before, and I love the fact that everybody's making money. But as you also know, the fundamentals soon come into play, and I just don't want people to lose about a lot of money as things do turn, and they will turn.
Well, they sure will. And we've, obviously seen that before. In this case, we've got places where the prices are going up, and yet still there's challenges with tenants not paying rent and eviction moratoriums that are lingering on and so forth. So interesting time. Layer on that the availability of capital and what it looks like in the money markets. And there's just a lot to try to digest. I also think that people get to the party late sometimes in a market like this. So you've been around a long time. You guys have been through up markets, down markets, sideways markets. And before we're done, we're going to find out exactly what you're doing in this market. But before we get there, maybe just take us through some of the basics, Ken, when it comes to understanding where in the cycle a market is.
Yeah, sure. Thank you. Well, I think, first of all, you guys kind of talked about it in the intro. Location and market is very, very important. And I think a lot of times people discount that, might even make it second or third in their criteria. As you guys know, that's number one for me. So when we see these statistics, it doesn't matter by state or by county or by city or even the nation for that matter, and you see vacancy and you see, rent growth and you see things like that. That is not happening everywhere. And so there are definitely markets that are going the wrong way, but nobody's talking about those, and then there's definitely markets that are really, really on fire, and everybody's talking about those. So I think the narrative, you have to be careful, just like anything, you have to dig a little bit deeper and do the research based on the areas that you want to look at. And also, is it sustainable? You don't want to buy something just because you're bidding on it and all of a sudden it doesn't make sense financially. And as you guys know, we like to buy everything from a cash flow standpoint, not necessarily on the capital gain standpoint. And I think that a lot of people overlook that because they're like, oh, we're going to have to offer, like, I think you said 100,000 higher or 50,000 higher or 20,000 higher or whatever the number is. But then that just gets you further and further away from the cash on cash. The whole point of buying real estate is to take advantage of the tax benefits, have the passive income, which is cash flow, and all of those things. So people, it's like they forget, and then all of a sudden they just buy because they think it's going to go up again. If you're going to treat housing like that, truly you're better off to buy Bitcoin.
We've watched you be prudent in this regard when you've got your eye on a property and you figure out, hey, here's the maximum we can afford to pay for it. We've got a plan. We're going to go in and we're going to, kind of create some more income and so forth. But the market, you've done your research and you kind of set a limit. And then many times a greater fool comes along and decides to pay more. Well, I think that's exacerbated on the mom and pop level. Like, they don't think about just the return. They think about, well, I got to get a rental house because everybody's getting one. It's all about the cash flow, and anything that might happen from the long-term appreciation and growth and equity. We love when that happens, but you can't count on that. So if you can engineer your, underwriting in such a way that current rents, current market, all that works, well, then if we get an upside, it'll work too. But you also have to protect against the downside. Can you speak to that part?
Yeah, of course. So to your point, like, if I'm going to give somebody 1,000, 10,000, 100,000, doesn't really matter the amount or the zero or the comma or where it is. If I'm going to give somebody money, I'm looking for a return on that money. And, so I'm always trying to, shoot for, a 7 or 8 or 9% cash on cash, which would mean, on $10,000, a 7% cash on cash would, that means $700 return, let's say, right? So that's kind of the point. And so that is the whole idea. I mean, if you're going to invest, the word invest, right? You want that money back. So a lot of people look at the house and the price or the real estate, and put it all together, and they don't understand that really until perhaps even the end. And sometimes, that's when they start to realize it doesn't necessarily work. And so you have to start with the end and then work backwards. And then that kind of tells you what you could pay for the price. And so it's not the other way around. It's always, okay, if I'm going to put $1 million into a deal, I'm going to want let's say a 10% cash on cash. Well, that's $100,000 a year of cash flow. If that's what I'm trying to solve for, it's actually awesome to be able to have that information and then to work backwards and see, okay, I need this kind of a loan. I need this kind of a interest rate on the loan. This is how much I can pay. You can now communicate to your seller very specifically, this is all I can afford. This is the number. And then if you just got to kind of stick to that plan, and then now you're not just shooting in the dark. And so for us, trying to mitigate, those kinds of things, start with that. And then what happens is markets do change. Vacancy changes. Let's say it goes up as an example, or even the price goes down, let's say as an example, or interest rates go up as an example. All of those things do and will continue to change over time. That's okay, because if you're way out there in the money, let's say at 10%, maybe it's 8 or 7 one year, maybe it's 9 another year, maybe it's 11 or 12, and it's never going to be exactly what you said it's going to be, but you have to start with something.
Well, I love the negotiation point, which is, I hope nobody missed this. When you are a buyer and you make an offer to a seller, especially if it's less than what they want, but even if it's more, coming in with a justification for that. Mr. Seller, here's why we arrived at the price we did. That's logical, as opposed to someone who just wants to, pick a percentage and we're going to bid, 5% below, or right now, maybe 10% above. Instead, you have to be justified, which means you have to have run the numbers. You have to understand. And I think that sellers can respect that, especially on bigger properties where you get the professional investor and they know, right? They bought it at a price. They put some CapEx in. They've been running the thing, and it's time for them to liquidate it and revert. And you come in and say, well, based on what we see, here's what we can afford to pay. That makes it a much more professional transaction as well.
Well, especially when you can show them their math.
Right.
Not your math, their math. Like you're actually using their data to show them why it should be what it is. And it's not like, and all of a sudden you've done your homework and they're more than likely going to walk or say, or move on, and they're going to maybe shop it. That's okay. But you, whether it's your money or somebody else, have to have kind of a plan for that money, for that equity. If somebody's going to give you money through a syndication, or you're going to use your own, generally most people, as we know, guys, are trying to find other sources of equity. And so you have a responsibility to that equity to provide a return on that equity if somebody's giving you money. And a lot of people, they say it, but it's almost something that they try to do, but it should be on the forefront. And if it is on the forefront, you're going to attract a lot more equity. You're going to buy better deals. You're not going to buy every deal, but it's really, there's a high degree of certainty from a buying standpoint. It just eliminates all the noise. It eliminates, should we or shouldn't we? You still have that decision, but it's super clear when you know the numbers.
Well, Russ always says, do the math and the math will tell you what to do. The numbers are critical. Let's break another paradigm, though, because people look at you and Ross and go, wow, they got thousands and thousands and thousands of doors, which means you're serving thousands and thousands of tenants and families, which is awesome. But really, you're not in that many marketplaces, right? Nobody knows every market. You mentioned there's markets that are crazy. There's markets that aren't doing well. But you guys hone in on just a handful of markets that you know super well. Can you speak to that, sticking with a market, how you do enough research on the front end to know this is a place we want to be long term?
Sure. Well, it's like anything. Like if you move somewhere and you buy a home and you move in and you don't know anybody, obviously you have to figure a lot of stuff out. And so it's the same way if you're investing. You don't know what the property taxes are, particularly the utilities, some of the zoning issues, and some of the rent growth and the employers moving in, moving out. All of that stuff you learn in a market that you're in. Like you read the paper, it's all very local real estate. So when you go somewhere that you don't know, you're at a massive disadvantage for the people that do know. You're literally not in the know, right? So what happens is when you buy something somewhere and you start to meet real estate agents and escrow folks and insurance people and title people and property managers and all these different folks that maybe service your property and contractors, you start to learn more and more and more about an area, and all of a sudden you become comfortable with it, really comfortable, or not, or average. You guys know, you've done a lot of deals, and so when you have done all of that work, which could take months or years, then my suggestion is always, why not just continue to buy in those markets that you already have eliminated all those potential risks, and you already know kind of the direction. Every market's going a direction. It's either going down, it's not going anywhere, like sideways, or it's going up. And it might be going up really fast, or it might be going up really slow, or it might be even going down really slow. So you have to know. That's your job to know. And so those are things, whenever we find a market that is generally, it's a population and employment growth issue. Whenever we find something like that, we love to buy more in that area for multiple reasons. One is, if I'm going to fly there, drive there, hire a property manager there, instead of seeing one property, you're bouncing around and seeing a lot of them. And there's just an economies of scale in every single way with contractors and realtors and property managers and all that. But also you get to know the pricing. You know what you paid, you know what you should pay, kind of a general idea what the expenses are. So the underwriting, when you're starting to solve to that cash on cash that we were talking about earlier, it becomes super clear. You know what the rents are, all those kinds of things. So for us, it just provides a more efficient, faster way to be able to purchase properties in a general area.
There's a lot of doors into real estate investing. Sometimes people are in the trades and they find real estate that way. Sometimes, like I was in real estate sales and I decided I wanted to be the biggest buyer of the product that I was selling. You came in the property management door, and that's such a critical part. A great property manager worth their weight in gold. That's where the rubber meets the road. And we've seen that probably more than ever in the last year. Last time we had you on the show, we were talking about the reality of managing through COVID.
Yep.
Give us an update there. Now that we've been through, a big chunk of it, there's been a year. You guys have properties in a lot of different markets. How is it all shaken out for you?
Well, first of all, the property management business, in my opinion, does not get the credit that it deserves. We all know when you find somebody that can manage property, they're gold. I get that question so often.
Yeah.
And so they should be treated, paid well, all those kinds of things, and we do, we don't always manage our own stuff. Sometimes we outsource ourselves. So that's a really, really good thing. And so what happens is, when an experienced property manager is in a market, they're anticipating managing things like we just went through with the moratorium. They're the ones that are proactive at the apartment association level, or the renters association level, or the city level, or the county level, or the state level. And so for us, we got really proactive, and we were part of a network, and we ended up collecting most of the rents. We survived the pandemic, but largely, guys, that was a result of having big cash reserves. We weren't sure in the beginning who was going to pay. When everybody got sent home in March of last year, we just weren't sure. We were like, okay, we got March rent, but who knows about April? Right. And crossing your fingers, as April came around, and a lot of people paid. And then May, we were concerned again because nobody was back to work, and we were like, okay, we don't know who's going to pay again. So every property was very different. And what we found is most of it was based on the industry. So if people were heavy, let's say in the entertainment industry, or tourism or things like that, they were pretty impacted. Or oil and gas was another area. Like we have stuff in Houston, and the students, we have students, and they all get sent home. And so there's all this disruption all over, but on the other side, if we had properties that were around, let's say, health and medical centers, then it was kind of the opposite, because those folks, as you know, were heroes during all this, and they were working their butts off the whole time. So they didn't even have hardly time to be in their apartments, but they were making lots of money during that period of time. So every market was a little bit different. And for us, we just tried to put our compassion hat on, honestly, and meet each person where they're at, try to work with them. And I think we weathered most of it very, very well. And we just looked at the numbers Monday, and it looks like, we're hopefully kind of through this. And now I say that, but obviously the government's been throwing a bunch of money at it too, in the form of stimulus or unemployment or, whatever the next term is. But the money's being thrown at people, which has been good for us. So I'm certainly not complaining, but it'll be interesting to see now where this heads as people. It looks like a lot of them don't want to go back to work, and I think it looks like some of the states are going to start shutting off some of that money, and I think the rubber's going to hit the road. The moratorium is going to be over, I think, at the end of June. And I don't think it's going to get extended. So I think the last half of this year is going to be very telling.
Well, it's a really good point. You talk to business owners who are having a hard time hiring people because it literally is more beneficial for a lot of folks to stay home and collect unemployment than it is to go to work. But to your point, they're still paying their rent. So for us apartment owners, we're okay with that. It's as we see that transition back into the workforce, and is there enough, real jobs out there, and we'll navigate that all together. We've got lots more to talk about. Our guest today is bestselling author Ken McElroy. He's a Rich Dad advisor for real estate. We're going to find out what Kenny and his partner are up to when it comes to real estate next. Plus, we're going to play real estate trivia. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Real Estate Guys listeners, are you tired of losing real estate deals due to financing issues? Have you had enough of waiting on banks, lenders, and investor groups to fund new projects? What if there were a way to eliminate all the hassle and invest in real estate on your own terms? I'm here to tell you there is. Patrick Donahoe here from Paradigm Life. I'm an Investopedia Top 100 Most Influential Financial Advisor, and I recently wrote a best-selling book about the financial strategy that changed my entire investment model, and the one that could change yours. To get a copy of my book for free and learn how you can maximize your real estate portfolio by acting as your own bank, send an email to mybank@realestateguysradio.com. Don't make another real estate deal without reading my book first. Email mybank@realestateguysradio.com now to get your copy for free.
In uncertain times like this, it's great to know there are two things you can always count on: high demand for affordable single-family homes to live in, and Terry Kerr's amazing Memphis team at Mid-South Home Buyers to find, fix, and manage the next addition to your recession-resistant real estate portfolio. The Memphis market is logistics and distribution dynamo with an economic engine that's essential to moving goods and critical supplies all over the United States. Quality rehab, proven profitable property management, affordable rents, and solid ROI make turnkey property investing through Terry's team a dream when it matters most. To learn more about Memphis and Mid-South Home Buyers, send an email to midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com.
Hi, this is Dennis Waitley, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio show. Thanks so much for tuning into the program. We're glad you're here this week and every week now in our 25th year of broadcast. It's not too early to start thinking about one of the coolest events of the year. It's the New Orleans Investment Conference. It takes place in the grand city of New Orleans, and it'll be live again this year. You can get the dates and details on our website at realestateguysradio.com. As usual, the Real Estate Guys will be hosting their legendary suite party, and you're invited. Come join Russ and I and a whole bunch of our friends at the New Orleans Investment Conference. We're talking today about what's happening in the markets, and our great friend Ken McElroy is illuminating us. He's always paying attention to this stuff, and we love hanging out with him. In fact, it's time to play real estate trivia, and today we're going to ask you a question that has something to do with real estate, and we're going to give you one of Kenny's books. Not just any copy, though, an autographed copy of Ken McElroy's latest book. It's called The ABCs of Buying Rental Property, not the ABCs of Real Estate Investing. You probably read that book, but this is his new book, The ABCs of Buying Rental Property. That could be yours if you know today's real estate trivia question. As soon as you hear the question and think you might know the answer, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Give us your name, the answer to the question, and your physical mailing address so we can send you out this autographed copy of Ken's new book. Last week on the Real Estate Guys, it was Ask the Guys, and we asked you this: where in the U.S. would you find a town called Miracle Whip? Yeah, for real. Well, the answer is the only municipality in Lafayette County, Florida, is called Mayo, Florida. And the mayor announced back in 2018 that the city was switching its name to Miracle Whip. It was actually a joke that officials let residents in on a few days after it started, but not before street signs and the name on the water tower were switched out. The small town of 1,500 folks located where Florida's panhandle morphs into a peninsula was paid by Kraft Foods for the temporary name change, and the money was used for city beautification measures. Here's our real estate trivia question for this week. Ken and his partner Ross have a whole bunch of rental units. Here's our question: which U.S. city has the highest percentage of renters? Yeah, which U.S. city has the highest percentage of renters? And this is as of 2020. If you know, or you just want to guess, send us your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Make sure you give us your name, the answer to the question, and your mailing address. The first person that gets it right is going to win an autographed copy of The ABCs of Buying Rental Property by Ken McElroy. That's today's real estate trivia question. We're with the author of that awesome book, Mr. Ken McElroy. Always good to hang around you, Kenny. And it's been fun to see that book. You know, we had you on when it first was released, and it really is maybe the most introductory book of all your books, and yet it's the perfect book for people trying to figure out real estate investing.
Yeah, thanks. It's funny, when Robert Kiyosaki first approached me, as you guys are, I was already buying multi-unit buildings. I had long before started with single families, and so I wrote the ABCs of Real Estate Investing, was basically writing about what I was doing at the time, which was pretty normal, and obviously that book's done well. But then I did the property management book and more of the advanced book. But everybody always asked, how did you start? How did you start? So finally, I was like, I've been asked this enough. I better go back and kind of recreate, some of my earlier deals and put together, how did I go from basically being a property manager to buying my first rental property and not knowing how to do it. So that's how I started, and that's why I wrote that book. So I was really happy to have that release. It's doing great.
Yeah, good stuff for sure. I remember on the Investor Summit one year, we did the panel discussion on going from little greenhouses to big red hotels, and it was you and Kim Kiyosaki and Tom Wheelwright was there to talk about the tax. My dad, I was on the panel. We had all started with just a little 2-bedroom single family or condo, and it was great to hear that contrast. And so great to have you revisit that. In fact, we're super jazzed. You're going to be joining us on this year's Investors Summit on the Sand.
Yeah. Well, I love Belize. I love your property down there, and the folks that you attract, they're my kind of folks. They're people that are trying to figure out what to do. They're asking a lot of questions. They don't believe everybody, which I also like. And they're trying to get lots of opinions. And as we all trying to navigate, the media and what we read and who we listen to, it's just one more really, really important good step for people, I think.
Yeah, for sure. Getting in those conversations is so important. Now, everybody likes to look at the market and see what's happening, but our motto, education for effective action, unless you're doing something with the information, it doesn't do you a lot of good. So let's talk about what you guys are doing these days. It's been an interesting market. We've gone through this whole pandemic thing. What's next for MC companies?
Thank you. Well, so here's the issue. Before the pandemic, as you guys know, we had a supply issue, and we still do. We never were building enough for the people, and that actually stemmed from years before. So all you got to do is Google this, and you can see that there was always a supply issue, and we were just kind of getting to that point where we're getting some momentum, where we were delivering apartments and single family housing and condos, and all those kinds of things were kind of happening. And of course, all that got shut down. during COVID. And now, of course, we have the construction cost issue and, the affordability issue and these housing prices have gone up a lot. I don't know if interest rates can go any lower. Rents were stagnant, but now they're starting to move. And so my belief is that we're going to have people, especially as forbearance ends and as the eviction moratorium starts, there's going to be a lot of movement in the second half of the year, both from the single family side and also from the rental side. Now, there's a zillion scenarios.
Yep.
Obviously, people are going to move in with other people. They're going to roommate up. They're going to move to cheaper areas. They're going to move in with their parents, their grandparents, et cetera, et cetera, et cetera, et cetera. So there's no one size fits all. But the truth is there's going to be a massive migration in the second half of the year, not necessarily on the home buying side as much as, on the renting side. And I think that we're going to see a pretty strong rent growth scenario over the next few years. So we're going to, even though we're kind of dealing with, some high vacancies and some collection issues around delinquency, around, of course, the eviction moratorium, I still think because of the lack of supply, the demand is going to be high, the supply is going to be low. You're going to start to see some real rent growth. And so again, if you can buy well today, I believe you're going to start to see some rent growth over the next several years.
Well, that's a key part of it, right? Everybody gets caught up in what's happening this minute. And we all want to know what's the latest and greatest. But as we say, this too shall pass, right? Every day, people get up and go to work and send a big chunk of their paycheck to their landlord. And that's not likely to discontinue anytime soon. You just have to be careful about the markets that have good durability of jobs and income and so forth. I know you guys spend a lot of time on that. And this has been an issue we've all been talking about for a few years. We have been underbuilt in multifamily and single family for a long time. I remember right in 2009, there was a big article that came out that said the coming housing shortage. And everyone's like, what are you talking about? There's houses everywhere for sale and all this, terrible decimation of markets. But if you do the math based on population and the aging out of property, we're underbuilt. So what do we do about it?
Yeah, so that's exactly right. So what we started to do was buy land and build properties and then start to buy properties that, we could have some value add around. So we bought 2 properties right now. They're right next to each other, which is awesome. And we're basically going to combine them and upgrade them. And it's a massive value add for obviously the investors. But we believe that the properties, one's really badly managed, the other one's moderately poorly managed. And so we're going to combine them. And we got massive economies of scale by combining them. We're going to put washers and dryers in all the units, which they have the laundry rooms and the hookups, but no washers and dryers. So that's $40 a month. And then there's a big value add component on the renovation. So we're getting about $135 a month for that. It's about $1 million NOI growth between the properties, but 648 units. So we're in escrow right now. We're going to close at the 16th of June. And, we'll buy those. So we're positioning ourselves to be able to find these value add properties. And these are built in the 90s, 9-foot ceilings, townhome units. These are nice properties. So we're excited about this deal that we're working on now, and we're obviously looking for many more.
Yeah, no kidding. Well, there is this opportunity to make sure that there's going to be that demand and it's going to be satiated. And you hit on a couple of super key points, and they go by so quick. But the first is this value add idea. When you increase the rent by just a little amount, $30, $40, $100 a month times 600 units, that has a substantial effect. And that not only impacts the cash flow, obviously, but it impacts the long-term value of the property. That's key. And then when you can find where there is inefficiency that exists today, and in your case, your expertise and background, all these years property management, there's a lot of mediocre management. And that's just sloppiness that you come in, tighten that up, and all of a sudden that creates an increase in income and therefore the net operating income.
Yeah, well, you guys wrote a book on it called Forced Equity. I love that book. That's essentially what this is. I think a lot of people buy properties and they're like, boy, I sure hope rents go up next year.
Right.
Well, that's not really a strategy, as you guys know. That's like, okay, great. I hope I'm still with my girlfriend too. I mean, how do you know? So I think what you do is you have to like take a look at the math, and you have to say, okay, this unit has not been touched in 15 years. It's got old appliances, old flooring, all the things that, we can do to upgrade it. And for that, we're going to get more rent. That's forced equity. Same thing with putting a washer and dryer. The people that live in these properties, by the way, these properties are beautiful. They go down to a laundry room. They're spending money now. It's not like we're charging them more. Like they go down and they're spending $3 a load, for a wash and a dry. And so, they're already spending money and carrying all their stuff up and down. So all we're doing is we're actually helping them. And yes, we have to buy the washers and dryers, but then they're paying, instead of paying the laundry room, they're paying rent $40 more. So that's what we call forced equity. And we do all of that before we even buy it. I actually do that before I even make an offer. See, these are things that we see, I'm like, wow, we got some rent growth here on renovations. We've got some consolidation issues, which is almost $200,000 by combining the two properties. And we've got a washer and dryer play that's going to generate $40 a door. So all of that is $1 million in NOI growth, which is $20 million of value add. So I knew that before we even made the offer. Now, was I completely right? No, I wasn't, but I was close. Once we got in and did due diligence, we started to figure out the real numbers. How many washers, how much were the washer and dryer is going to cost? How much can we get for washer and dryer rent? How much can we really get by unit for renovated units? And how much it's going to cost to us to renovate that unit? And how much can we really save by consolidating? So all that math was a little different, but at the end of the day, it was pretty darn close. And it ended up being about a $20 million value add. So that's all before we buy the property. That's before we even make the offer. And they cash flow day one. So we got cash flow day one, and we got a big value add. That's how you make investors money. That's how you make money.
Love that. That, ladies and gentlemen, was a masterclass on how you approach this exact kind of an investment. You do your best to figure out all the angles ahead of time, knowing what you know about the market, knowing what you can see about the property. You get that figured out. Then you go in, you get the thing in contract, and now you got to really make sure the rubber meets the road. And again, you're not going to get it exactly right, but as long as you're within spitting distance, right, that's exciting. Of course, one of the things that you guys have done for many years is let investors play alongside accredited investors who want to passively invest. They can come alongside your team who's been in the market doing this for a long time, and that's always a great way to go. What's your expectation these days? Your passive investors, are they champing at the bit to do more? Has it been harder to find deals? What's it like then?
That's a great question. Yeah, so we've been growing. Our investor database has been growing every week. Last week we had 88 new people literally sign up as accredited, which was the most we've had. And I think there's a lot of reasons. Obviously, just like anybody, just like me, I've got money in different things. And so the people have got money in their businesses, they got money in their homes. Some people got money in the stock market, maybe the crypto or whatever it might be. But everybody's trying to make money on their money. What I found is that because of what's happening with the stock market, the economy, and some of the crypto and people's businesses, they're looking for alternative ways to hedge inflation. That's been kind of the number one thing. And as you guys know, a great way to hedge inflation is debt.
Yep.
Fixed rate debt. Obviously, we've got, I'm trying to remember, I'm going off of memory here. I want to say that I'm putting about 50 million in debt on these properties. Maybe it's closer to 60. And it's fixed rate, so I'm hedging inflation. So if my inflation's over 3, then I'm basically using free money because, so a lot of people are trying to figure out how to move their money into something more like that, because as lumber prices and all these different things go up, then the cost to build a property goes up. We're going to be into this property fully renovated at $135 a door. That's very, very good. And I asked my acquisition guy yesterday, I said, Bobby, if I take that property and move it to Phoenix, and Ross was on the phone, my partner. What would it cost to build? $220,000. That's the way I think is, okay, if we scraped that property and built it today, we would be north of 200 grand a unit. I'm buying at 135.
Yeah.
So, fully renovated, I'm actually buying it a lot lower than that, more closer to 125. And so, by the time we renovate it, we'll be all in at 135. And that's so far below replacement costs, and it cash flows, and I have a value add. It's a full win-win-win for everyone.
All right, awesome stuff. Well, always excited to hear about the latest Kenny McElroy deal. Hey, Ken, for folks that maybe are accredited investors who this sounds interesting to and they're not yet on your list, what's the best way for people to find out more?
Sure. Thank you. So I would just go to MC Companies, www.MC Companies. There's an investor portal there. Just click on that. Obviously, that takes you into the questionnaires that you have to fill out to be accredited, and then boom, you can download the business plan and away you go.
All right, awesome stuff. Hey, as we get through the next half of the year, there's a lot to be looking at. Very excited to be together at the Investor Summit here in a month to really get some big brains talking about this stuff. But what are you paying attention to as we come further out of the pandemic? There's been a political change. There's all kinds of stuff going on. From the big picture point of view, what are you noticing?
Well, I'm paying attention to affordability. That's a big one. I don't think a lot of people are really paying attention to it. They're kind of talking about it. Next week, I've got a friend of mine. He was just appointed by the Arizona governor to handle homelessness in Arizona. He's going to be on my podcast. I'm paying attention to that. I don't know if you've watched, but New York has already converted multiple hotels into homeless shelters, and Seattle is in the process of doing the same. Literally buying hotels or master leasing hotels and converting them. Those are real. There's real estate implications around that. Obviously, we're looking at migration patterns. Where are people going and why? And that's going to continue. And then, not to be political, but people vote with their feet. They just do. They vote with their feet. So what that means is, if things are really expensive somewhere and they can move 30 minutes away or 45 minutes away or even multiple states away, they're going to do it if they can to save a significant amount of money, especially with this work from home thing. So that's a really interesting thing that's happening now. And so we're looking at all of those things and trying to obviously be in the right place at the right time, like everyone.
All right, Kenny, well, we sure appreciate your input, your time today, your unbelievable wisdom and experience. If you want to find out more about what Ken does, check out his YouTube channel. He's very prolific. He's got an awesome podcast and, of course, an incredible collection of books, and you should read every one of them. Ken, we'll see you at the summit. Thanks for being on the show today.
Yeah, guys. Hey, thanks. That's going to be fun. I can't wait to see you both. Let's have some fun and educate some more people.
Let's do it. There's Ken McElroy. More when we come back. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
Having trouble finding deals where the numbers make sense? Invest in an asset class that delivers cash flow to you in good times and bad, and where most of that cash flow is tax-free. I'm Dave Zook. Many of you have heard me speak at Real Estate Guys events or heard me on their podcast. My team is a top 5 ATM operator in the country, and right now accredited investors can make cash flow returns well into the double digits and get huge tax deductions. For your free report on this lucrative asset class, email atm@realestateguysradio.com.
There she blows. Just a few spots remain for the Real Estate Guys 19th Annual Investor Summit. Imagine spending an entire week with like-minded investors, world-class educators, and real-world professionals. Returning this year is the editor of the Gold Newsletter, Brian London, international real estate developer Beth Clifford, Jim Rohn's 18-year business partner Kyle Wilson, and the author of The Creature from Jekyll Island, G. Edward Griffin. Plus, coming back for his 9th Investor Summit, best-selling author and the Rich Dad advisor for real estate, Ken McElroy. And joining us live in person once again, Robert Kiyosaki. Plus, lots more. It all begins June 11th in beautiful Belize. Visit realestateguysradio.com and click the tab that says Summit to reserve your spot while there's still one left. This transformational week is like no conference you've ever attended. Go to realestateguysradio.com and click Investor Summit and make plans to spend a week with the Real Estate Guys, Ken McElroy, Robert Kiyosaki, and an all-star faculty on the 19th Annual Investor Summit.
Hi, this is Mark Skousen, and you're listening to The Real Estate Guys.
And welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Hey, if you hurry up, you can still get in to How to Win Funds and Influence People, our once-a-year, 2-day training program on sales and persuasion and confidence and all kinds of cool stuff. If you're in any type of business where you consultatively sell, you sit across the table, you're on a Zoom with somebody, and you want to learn the art and science of sales, this event is for you. Get all the details on the website at realestateguysradio.com under events. Well, my goodness, every single time I listen to Ken McElroy, I learn something.
You know, the thing about Kenny is you really have to listen carefully because he says little things just in passing as though they're inconsequential, and yet they're huge. You know, one of the things that he mentioned when you asked him what he's looking for, what he's looking at, he talked about hedging inflation.
Yeah.
He talked about using debt as a way to hedge inflation. And I just don't think people really understand. And of course, as we are doing this, the CPI number just came out and it was just huge. I mean, they were projecting a low number,
right.
Huge number. And we've been following this for a long, long time because a lot of people who have their hands on the levers of power right now in the printing presses believe in something called modern monetary theory. And that's the idea that as long as you are borrowing in the currency you issue, you can borrow as much as you want because you can print as much currency as necessary in order to cover that debt. And clearly that's what's going on. Their metric, or the way they know they printed too much, is when they see inflation. Well, you know, my rebuttal to that is yes, but it doesn't show up in prices. It shows up in the marketplace and the entrepreneurs not getting the productivity gains. All these investments they make to drive the costs down don't show up in the price, but they also don't show up in lower prices or more production. And so that is the kind of the theft of the productivity. By the time you've eaten all that up and then passed over to where it is actually showing up, it's big. It's not little. It's big. And it's built momentum. And I think because they don't see it, it's surprised everybody. Now, the thing is, if you've been paying attention to our show and the people that we follow, like Kiyosaki and Kenny and Peter Schiff and all the people that we feature on the summit every year, we've been talking about the direction of the dollar for quite some time. In fact, in 2016 at the Investor Summit, we did the whole future of money and wealth. And those presentations were prescient. I mean, when you look at the things that we talked about then and then what has happened since, people who listened to what we said and what that faculty talked about and implemented it are in great shape today. Well, the world is changing even faster right now. And, you know, every year we say it is, boy, this summit, it could be the most important summit ever. Well, here we are, year 19, and it's probably going to be the most important summit ever.
Yeah.
I mean, there's overt talk around the world about a great reset. Everybody can clearly see the dollar is in trouble. I mean, lumber prices adding $36,000 to the average home price. I mean, if that's not going to price out some people and force them to become renters, I don't know what will. And Kenny mentioned that too. Again, just in passing. Imagine being able to have a conversation with Kenny and go deep. Imagine being able to, day after day, for a period of days, to be able to engage with people who are listening to the same thing he's talking about and talking with them about it. That's what the summit's all about. If you enjoyed this interview, and I can't imagine that you wouldn't if you're a serious real estate investor, how much more are you going to get out of being in a room full of people like Kenny, the people that Kenny invests with, the people that Kenny listens to and takes advice from, and all kinds of other investors like you that are just out there, to Kenny's point, trying to figure it out. You get in a room full of smart people asking great questions on a base of real world experience, and you get a bunch of subject matter experts that you can converse with. You can learn more in 8 days than most people do in 8 years, not to mention the strategic relationships. Just one idea, one great relationship, one opportunity can totally make it all worth it.
Kenny comes as a student to learn. He is pretty much in every session. He's totally available at meals and over cocktails to hang out and talk real estate, and he loves doing it. It'll be his 9th year, and he'll be joined by all kinds of amazing faculty members, including the author of The Creature from Jekyll Island. G. Edward Griffin is coming back with us again this year. I think we just barely added him to the website. And a funny thing happened this week. We sold out of the summit, and we literally went and set the room up trying to see, could we squeeze another seat in? And we got just a handful more. So we're back open again. So if you missed out and were told, hey, you can be on the waiting list, we've now sent something out to all those folks to say, if you hurry, you can get in. It may be too late by the time you hear this, but if not, we'd love to have you join us for the 19th Annual Investors Summit on Sand. All the details on the website at realestateguysradio.com under the button that says Summit. Big thanks to Ken McElroy for sharing his big brain with us today. Next week on the program, we've got one of the top 20 living economists in the world. Until then, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors. From attorney and rich dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.